What's up, Tim Sykes here, actually giving a challenge webinar and doing a live video lesson. A lot of different trends and patterns to go over right now, so I'm going to try to put them all in this one video. PIXY is the big pre-market spiker. What you have to understand, and I've been saying this in the past few dozen video lessons, so it should not be a surprise to anybody if you study enough. These terrible long-term stock charts, they are the most heavily shorted. And shorts are not wrong in their thesis. These are terrible companies. They will drop in the long run. But because there's an abundance of short sellers, especially over-aggressive, untrained, toxic, discord, groupthink short sellers right now, otherwise known as lepers or lemmings, whatever L word you want to use, they're all shorting the same stocks. And that leads to fantastic spikes. And I say this like mockingly, but also I'm truly grateful. Because of these short sellers, these stocks become the biggest spikers in the market, even when they don't deserve to be. And the short sellers get angry because they say this stock doesn't deserve to be up. But what the short sellers don't understand is that because there's so many shorts trying to attack these stocks and push the price down, and when they're unsuccessful, they have to buy to cover their shorts back, they inadvertently create the best spikes. And for those of us who are aware of this phenomenon, those of us who are not biased, being like, oh, I must short this stock, it deserves to go to zero, there must be justice in the world. If you're unbiased and you just say, hey, this is a crap company, but because of all these shorts, this short selling infestation, if you will, it creates this powder keg of upside potential for the worst of the worst. The worst of the worst, fundamentally flawed companies become the best of the best potential spikers. And it's very difficult for short sellers and even some longs to reconcile this in their head because they're just like, no, good companies spike, bad companies drop. But we are in an inverse market where the worst of the worst can spike the most. And, again, some people just can't adapt. I got to give props to Madaz. He's made millions, but, he's saying like, don't care what anyone says. This market sucks. Everything is a fake out or a scam. Logging out now. He lost 65,000 yesterday. He was shorting SLNO. SLNO was a big, terrible company spiker yesterday. Again, terrible company, probably does deserve to go down, but because of the shorts, it created this massive squeeze. So learn from people Madaz, and I don't mean to just single out Madaz. He just tweets everything transparently. So, props to him for his transparency, but also recognize how many short sellers there are, how many short sellers all follow each other. The reason why I say these groupthink Discord chat rooms is people love the comfort of others. They love it with asking people in the chat, like, hey, what do you think about this stock? Are you in this stock? Oh, you're in this stock? I want to get in this stock. Versus me, where I, even if you see me with my millionaire students in any one of the villas we stay in around the world, I actually always go to my own separate room to trade. I don't want to be influenced by anybody. I don't like the comfort of other people in my trade. I encourage nobody to get into any similar trade. I want you to learn these patterns yourself. By all means, recognize when, someone buys or sells a stock, but don't buy or sell the stock because someone else is in it. Learn why they're in it or why they're not. As I was saying, actually, to start this challenge webinar, DMK was my big winner yesterday. Stocks to trade breaking news, nailed it. Absolutely nailed it with the news, the patent news. And it's pretty good, right? I got in at 92 cents. Only got a partial position. I actually wanted 15,000 shares. It was just spiking so quick. And I got out at $1.20-ish, made 30% plus. Nice little win for someone who was very busy. Did I miss the absolute entry? Yes. I missed it so, I was so late to the game. And it wasn't because I was waiting. It was because I just wasn't there. But I recognize that this is one of these terrible plays. The worst of the worst can spike the most. DMK spiked big once and it failed. Okay. And when you have these kind of one and done spikers with a long-term chart, that really gets short sellers aggressive. And again, this is what makes it very difficult. DMK has dropped 50% off the highs now, more than 50% off the highs in just a day. So you say, oh, Tim, what are you talking about? Shorts aren't wrong. Like DMK has dropped, big off the highs. But the only reason why it went up so much is because there were so many shorts there in the first place. And they're shorting it at 70, 80, 90 cents a dollar. And, again, a day later, they can be right. But you don't know if it goes up to $1.40, $1.50. It might go to $2 or $3 a share before it's all over. SLNO, I saw so many short sellers with all kinds of different predictions, shorting it in here when it went from the 4s to the 18s, and then it comes down, and they're like, oh, it's definitely going to be single digits by the end of the day. And then it goes to $30 a share, right? Like, you don't know how high these plays are going to go. And I said this partial fill on the dip buy. I waited for the dip. I don't want to just buy any of these stocks right at the highs. When I bought, DMK had already touched $1 a share, and it came down. I was actually trying to get it in the 80s. It was just moving so quickly. I got a little lucky on this one. I have to admit, it got halted. I think once these stocks start spiking too much and early shorts are trying to cover and market makers can't maintain the price for too long, you get these volatility halts. And this, I think, halted at $1.09. And if it didn't get halted at 109, I would have been selling at 109 because it had already hit my goals. But it got halted, and then, when it gets halted, it gets on more traders' radars, and then they try to buy. It went all the way up to the $1.40s. DMK. Oh, I didn't even know it got up to $1.50, right? So I'm selling, right in here. So near the top, but there was more upside. I took basically half of the potential profits. I made 30 cents a share, and I left 30 cents a share on the table. And that's the beauty of this. And also, I was 30 cents a share too late from the Stocks to Trade breaking news alert. So there's so much freaking upside. I took 1/3 of the potential profits. Anybody with any preparation, and again, with Stocks to Trade breaking news, you could have made 100% on this from bottom to top. You're not going to time it perfectly, but you could have. And again, this is why I say use Stocks to Trade breaking news every day. Not because you should trade every alert, but because you should learn from every alert. Okay, this DMK spiking, this price action was very similar to SLNO, big spiking right in here. If it had had a bigger dip like SLNO did, I would have gone even bigger. But I didn't, DMK didn't really have that big of a dip. I got this little candle right here. This was the one little dip that I got. The news came out right here. There was a lot of time to buy it on the way up. You're just scared because you're buying it on a dip, but you don't know if that's the actual top. But you can usually tell when there's increasing volume. This is a big thing that I look at where it's increasing volume every minute. It's not over. Okay. It's just starting. Right here is where it topped, and you can see the volume even before it topped here at 1:07 p.m., 1:08 p.m. The volume had started dropping right here at 12:40. So the price didn't start dropping really until 30 minutes after the volume dropped. And there were a few volatility halts in here too. But look for the increasing volume, and the increasing volume usually precedes the increasing price. And the decreasing volume precedes the decreasing price. So pretty beautiful to see. I'm really happy to take advantage of it. I'm not always good. I'm not always perfect. I tried MOND on a dip buy. And, this one was a big spiker. It was a big spiker and then a big failure. And I tried the dip buy somewhere in here, and it just couldn't bounce, and you just have to get out. MOND is a good example of another kind of one and done. It had a one and done green day, and now we're right back at the lows. So don't overstay. Don't think that these plays can keep going, but sometimes they do. And PIXY, it looks like, is the play that's doing it today. It's already up, 10-15% since I started this video lesson. I probably should be focused on PIXY instead of this. It's just pretty cool to see where, this is a short squeeze. This company does not deserve to be up 200%. It's also a reverse split, so it's difficult, like where if you're buying the stock and the reverse split happens, like some brokers don't recognize it, even if you're shorting it. I guarantee you there's a lot of shorts shorting this anywhere from $1 to $1.25, being like, oh, this company doesn't deserve to be up. But it's really complicated where if you're shorting, like this thing could go to $2. It's just funny money. It's just ridiculousness. And if you're shorting, it's very, very dangerous. I'll give you one more example. Ellis, Art of War, he was shorting FEMY yesterday. And Ellis is a great guy, one of the best mentors that we have in the challenge, former NFLer, very much into discipline. But he was shorting FEMY yesterday, and I was like, what are you doing, dude? And he's like, terrible, long-term chart, history of one and done. And I'm like, yes, terrible history, a lot of one and dones. That's the exact kind of stock to buy, not to short. And he was shorting it in here in the 120s. And again, it was range bound. You can see it spikes up, comes down, spikes up, comes down, spikes up, comes down. You can make a case that it's good to short it here at 125 long term, right? It's probably going to fail. And long term, I mean over the next day, 2 days, 3 days, it's probably going to go back down. But why would you risk it when you know that there's so many shorts? And again, I thank Ellis because he actually is in these other short selling chat rooms. And I'm like, thank you for, stoking the fire. Like I always mock short sellers because I have to teach you guys. I think that it's just a very dangerous strategy. You don't know how high these plays are going to go. You're risking really financial meltdown. It's like playing with nuclear war. And again, people say, oh, it's risk management. This is like the same kind of mentality when you have a nuclear reactor. Like, don't worry, it's fine. We have risk management in place. And then, you have a nuclear reactor blow up every now and then. All it takes is one. And FEMY did come down, and Ellis did cut losses on his initial short. He only lost $800 because, again, he's disciplined. But why put yourself in that position? If you recognize that these one and done stocks are spiking so much, why not consider go long? Why? I know it's tough because you're like, what are you going long? You're buying the worst of the worst. I get that it's difficult, but traders adapt. And for me, the way that I've now, again, I'm only up $50K this year. It's nothing huge at all. But after my big loss a few months ago, I was only up $8K on the year. I could have gone negative. It was not necessarily a given that I was going to be profitable. And I'm not great at buying these squeezes. Some people say, oh, Tim, of course you're going to say that. You're just trying to squeeze the shorts. I didn't even trade FEMY. I didn't even trade SLNO. Okay? I'm not going to nail every play. Buying short squeezes is not my ideal pattern. I'm not great at it. By the way, PIXY is going up pre-market even more, new highs. It's not my favorite pattern. It's just a pattern that I see in play, and I think that it's wrong to ignore this pattern, and it's even worse to short oblivious to this pattern because we're seeing it every single day, trade after trade after trade. And to Ellis's credit, he might have shorted, too early on FEMY in the 120s before it went to 150. I think he cut it. I don't know if he cut it in the 130s or the 140s, but he cut his loss on the way up here. But then he got back in. And the good news for him is that, yes, he still profited. He got back in. Congrats to him. He finished up a little more than down. But the bad news is that many of you don't have the experience. You don't have the know-how. You don't have the account size to get back in. So if you have a small account and you're just testing the waters and you make one trade, if you're shorting FEMY pretty much any time during the day, unless you're shorting after hours, which is even riskier, but anytime during normal trading hours, you would have gotten squeezed. And then rule number one is cut losses quickly. And then some people will say, well, you don't have to cut losses quickly. It comes down. But what if it doesn't? It's always a problem. It doesn't matter if it comes down in the long run if you follow rule number one and cut losses quickly. And then you say, well, I don't want to cut losses quickly, Tim. It's going to come down. And you try to rely on that. And the majority of the time it will come down. But every now and then it won't come down. And every now and then, even less of the time, it'll balloon into a full supernova. And those full supernovas is where you blow up. So even if you say, Tim, like I'm going to control my risk, I'm taking a small size, I'm not talking about 1, 2, or 3, or even 5 or 10 trades with this strategy being dangerous. All it takes is one to keep going. You don't know if FEMY is going to stop at $1.60 or $5.60. And some of you will say, well, of course I'm going to get out before then. Not that easy. A lot of people start with small positions and then they keep adding, like averaging up. Let me just average up. It's such a gimme. The higher it goes, the more you think it's going to crash. And it's a very slippery slope. It's like a crypto hodler who just keeps hodling and doesn't take any of their profits. And then little by little, their gains are gone. And then you have a loss. And then when you have a loss, you're like, well, I have a loss. Now I might as well wait even more. You can always make an excuse to stay longer in these plays. And with FEMY, you could have potentially outlasted the squeeze, but you just don't know which ones are going to come down so well like this versus plays like SLNO, which don't or haven't come down yet, and they just keep going. And a lot of people lose a lot of money. I just don't want you to be in a position where you lose or even risk losing a lot of money. People think that's trading. They're like, oh, trading is so tough. You can risk losing a lot. You don't have to. Trading is what you make it, okay? The world is what you make it. Just because someone might have a very toxic viewpoint of the world does not mean that the world is toxic. That's just their viewpoint. Short sellers make trading risky because they're embarking on these risky strategies. Trading is what you make it. For me, I trade like a coward. I trade conservative. You can say I trade like a bitch, whatever you want to say. And I would agree because I have the data to back it up. Small gains, small losses. Small gains, small losses. I don't win 100% of the time, but I'm also, very importantly, not playing with fire. And more importantly, I'm not playing with nuclear weapons. None of the trades where I'm going long, where I'm using a small position size, none of them are ever at risk of blowing me up because I trade so conservatively. And some people will say, well, Tim, scared money doesn't make money. Yes, it does. I've made millions of dollars trading very scared all my life. And the more that I trade, the more that I teach, the more scared that I get. Because I am convinced that it is these small gains that are key to changing your life. And now 30 plus millionaire students, all of them have very similar small, safe trading in the beginning of their career. You can always get more aggressive later on. You can throw out my little rules, you can say I'm training wheels. But I will 100% unequivocally, without a doubt, tell you that safe trading can still make millions. And you don't have to risk blowing up. And you don't have the stress levels that a lot of people have. Let's not just talk about money. Let's talk about how short sellers look and feel. Their health is failing. They have health problems galore. They look like they're double their age. It's like a smoker, right? Like smokers look older. If you've been smoking every day of your life, like you have a different look. If you're in a toxic relationship every day of your life, you're just not going to look as happy or energetic as someone who's living in a healthy way. So I think trading can be healthy. I don't think it has to be hugely risky. And that's why I encourage you to just buy junky stocks when they're squeezing. And guess what? If you're ever wrong, if you don't catch one of these big squeezes, again, you follow rule number 1, cut losses quickly. Rule number 1, cutting losses quickly is so important, long or short. Creating a kind of a mechanical, non-emotional approach keeps you in check on every trade. It's not as much fun. Sometimes I get out with small gains or small losses and the stock does exactly what I want and I missed out. I'm not going to say that that's not going to happen to you because it will. But by really playing safe and not risking financial destruction, it's a beautiful way to be. So anyways, Matt Monaco is giving a special webinar. I'll post the link below. I'm sorry, I haven't even talked about it. Matt Monaco just recently got engaged. When we made the 30-day boot camp, he was up like 50,000. This was like 3 years ago. Now he's up like 2 million. Former computer programmer, and he's been using his programming skills for this new strategy. I highly think that it's worth checking out. Also got to give props to some students like WEC, banked on FEMY 41%. Jay Rifkin made like 30% on FEMY. Those are just two of many students. I'm sorry, I can't call everybody else out. Not enough time. Also, I said, can we get a repeat of this 1987 stock market crash? I don't know. I think it's, maybe a little too much fear, but it could happen. Crazier things have happened. So just be careful the next few days. You've seen me trading, very conservatively the past few weeks, and you're going to see me continue to trade very conservatively right now, just based on history. Okay? I'm nothing more than a glorified history teacher. It's the height of all stupidity, laziness, stubbornness not to study the past. It very well could happen. I don't think we're going to have a huge crash, but this kind of fading price action on the NASDAQ, it doesn't surprise me that much. There's a lot of danger zones. If you take away like the 7 hottest stocks in the market, I think the S&P is up, 2% this year? Like it's basically 7 stocks like Nvidia, Amazon, Facebook, aka Meta, Apple. If you take away like the 7 best, we're pretty much in a flat market. And what happens when those 7 best actually start to underperform? Just be extra careful right now. Very similar to me saying you don't have to take a lot of excessive risks. Shorting, if you ever go long, you never have to hodl. You can recognize what the market is doing. I'm not saying that we're necessarily going to have a big crash, but it should be in the back of your mind because 3 out of 4 stocks follow the market. And as tough as you think trading has been in 2022 or 2023, I mean, it has been tougher compared to 2020 and 2021. But if we do get a crash, which many of you have never been a part of, these stocks don't just drop 5, 10, 20%. They drop 50, 60, 70% in a few minutes. The market dries up. And then my rule number 1 about cutting losses quickly becomes even more important. And people don't realize it until they have a big loss. I've been teaching for 15 plus years. I lost track of how many students ignore my rule number 1, then they have a big loss, and then they message me and they're like, I wish I would have listened to you about rule number 1. And I don't like saying I told you so. I just want to help you understand that rule number 1 is so important, especially in a crash time. You do not have to go down with the ship. I don't care what any toxic groupthink leper lemming chat room says. Every single one of you should focus on your own trades. We're all different. Just because somebody else is in a trade, you don't know their, schedule, you don't know their account size, you don't know their personality. Focus on making the best trades for you. By all means, pay attention to other traders, see what they're doing, but think about why are they in that stock? Why did they buy and why are they exiting? And then you can try to learn the process behind everybody. This is the beauty of my 30 plus millionaire students. I'm pumped for everyone who's coming to Vegas, by the way. By the way, my conference is 100% sold out. Everyone's messaging me, oh, I didn't know. I talked about my conference for like 2 months, okay? I hyped it up, and I was like, it's going to sell out, it's going to sell out. Some people didn't believe me. We're a month away from the conference today, or yesterday. 1 month away, we're 100% sold out. Stop messaging me. It's crazy to me that you had a month to sign up and all kinds of excuses. So maybe even a month and a half to sign up. So I'm sorry, but it's good to be real in an industry full of frauds. And frankly, it's a hot market with a lot of potential money. If you're not an action taker, if you're not action oriented, you will get left behind. So it's a good lesson. Stocks to trade breaking news, by the way. The alert was right here at 12:06 p.m. And just a few hours later, 176% gain. So pretty cool. Anyways, that's today's lesson. Let's see what Pixie is doing. And I'm not saying just buy randomly, okay? I just want you to be aware, like when the market opens in 15 minutes, I'm filming this pre-market, my number 1 watch is going to be PIXY. And we're going to see, even if it drops at first, it can still just be a fake out to lure in short sellers. Always be on the lookout for stocks that are sucking in short sellers galore, because then it can squeeze much faster than shorts realize. And it's a beautiful thing. And I truly am grateful. I say this about short sellers a lot. I have to warn people about it because I think that it's a very risky strategy. But I am truly grateful to every last short seller out there who sacrificed their health, their wealth, their sanity, shorting these companies, and then a lot of the time getting squeezed and being a big part of the reason why, there's so many stocks in play. We don't really have the hot trends right now. We don't have the hot market. Short sellers, thank you, thank you, thank you. Everybody else who's not a short seller, be warned. I'll see you guys in chat. All right, what's up? Tim Sykes here. Really kind of interesting scenario. I filmed this previous video lesson during a challenge webinar earlier this week. Never get a chance to even post it because I wanted to do a follow-up, and then, there's too much going on. Interestingly, from that first video until this one, it's just been like 2 trading days. I was giving Ellis crap for shorting in here. I guess it's been 2.5 trading days. He was shorting in here in the 120s and he got squeezed. He lost like 800. He reshorted. He made back like 900. And what you have to understand, this is a great example. Part of the reason why I warn about short selling is because short sellers are just so on the wrong track. Whether you make a little, whether you lose a little, you're just on the wrong track. It is the absolute dumbest, worst strategy right now because of the risk. In this case, FEMY, nearly tripled 2.5 days later. But who's to say that it wasn't going to do this here, okay? The interesting thing is that I warn about this. I try to teach about it. I show example after example. If you go back through all my video lessons of 2023, this has been pretty much my #1 theme. Shorts don't listen. Why? Because they're right fundamentally. These companies are crap. And they're right more times than not. So when you win 6, 7, 8 times out of 10, you're like, okay, I'm on the right track. I win 6, 7, 8, 9 times out of 10 too, but my gains are bigger than my losses. The problem with short selling is that you might win the majority of the time, but all it takes is one bad play, and it's not just a loss that's bigger than your gain. You blow up. You lose everything. Why is FEMY going to the 3s? Because it's a short squeeze. I thought, and frankly, I still have to get better at trading these, mea culpa. I might be on the right track teaching, but I still need to get more aggressive buying. Mark Crook too. Mark Crook was long this in the 1s, and he was like, oh, I wish we could get it back. It's so difficult to think that the absolute worst companies can spike the most, but this is where we're at. And God bless Ellis for shorting here and covering and, taking a small loss and then taking some small wins. But he exemplifies the short selling mindset. He's in with all these short sellers. And I always tell him, like, he's kind of tired of it. He's like, not today, Tim. I was giving him crap earlier this morning. He's in with all these short sellers. Short sellers don't like me because I'm basically calling them out. Again, I appreciate every last short seller for sacrificing their health, their wealth, their sanity for the greater good, because they are the ones who are helping create these squeezes. FEMY does not deserve to go to the 3s, but there's so many shorts in this, and if you've been watching it, like, it barely comes down. Like, I'm waiting for a big panic to dip by. But it barely has come down. Why? Because there's 1, 2, 3, 10, 100 short sellers who were just caught and they're getting squeezed. I was watching it, one of these breakouts. Was it this breakout or this breakout? I don't know. When it looked like it was gonna, double top, like there were some sellers, and then when it just made I think it was right here. Yeah, I think it was right here. Another penny a share and another penny a share higher. It just squeezed, it went from a 1 cent breakout to like a 15 or 20 cent breakout in about 3 seconds. Right here, you can see it kind of double topped at like 310, 312. Let me zoom in. Right here, they tried to make it a double top. And right here, when you see it goes from 312, in the next minute, it's like 333. Why? Because there's shorts who are just getting squeezed, and they're just like, no double top, and they're shorting from the 1s and the 2s, and they're just getting annihilated. Same thing here, where it looks a little toppy here at 333, and I frankly thought that this was like a weak breakout in the 330s, and it comes down to 318, and the shorts think they've won, and then 1 minute candle, it goes from like 318 up to 350. And this is just some short seller covering and being like, I give, okay? I want you to understand that it is fantastic for those of you who are going long. Let me just show you. I mean, these are my trades. I have some losses. I've been trying to trade these short squeezes in these plays. Not so great this week. Still up 10 grand on the month. So it's a better than average month for me. But OPGN was really choppy. I was late. WVE, I was early. AYTU, I had a small loss, but a better, bigger win. And this has been the secret to my success. Like, I have a lot of small losses because trading these short squeezes and these fast movers, it's annoying. It's so annoying. I miss my OTCs, but, when the OTCs aren't in play, I'm trying to take advantage of the plays that are happening. So I'm having a lot of small losses, but my gains are bigger. Like this AYTU, this was such a beautiful trade, dip buying it, earnings winner, fast runner. I sold too soon. Same thing with this DMK, big spiker with patent news. I played it way too safe. NIR, I mean, this thing spiked 50% after I sold, but this is what I'm doing to succeed. Okay. I'm recognizing that this is a short squeeze market. I'm recognizing that these plays can really run. And I'm trying my best to capitalize, even if, I'm not that great at it. I'll just be honest with you. It's a new pattern for me. I got to give props to students. The Beast was watching my video lessons, being patient, in at 217, out at 326. That is much better than I have ever done on any of these short squeezes. I just don't have the patience. But I am waiting for a panic. And when the panic, if and when it does come, and it happens near the morning market open, I will be ready. But I got to give props to several other students. Jake in at 152, out at 266. Very happy after a 3-month hiatus from trading. Awesome job, Jake. Rustam in at 224, out at 243. That's still nearly 10%. Diving in trading, 230 to 255, 10%. SD stocks in at 214, out at 241. Only 1,000 shares. Have to go to my day job writing software for bank. And then Ace Trade, again, another 10%. We all underestimated it, but we're all trying our best to capitalize. I'll keep calling out short squeeze after short squeeze, big runner after big runner. The shorts are especially angry with NVOS. NVOS just announced some, $1 billion, some sketchy PR. All the shorts are like, it's fraud, and they're all shorting. And, the thing is still up 75%. Like, learn to accept that these shady companies will do shady things. The shorts think like that they're just going to stop. Like, oh, if we short enough, if we call out enough, it's going to stop. It never stops. Welcome to Wall Street, you newbies, okay? There's always going to be small caps doing shady stuff. There's always going to be pump and dumps. There's always going to be spikers. And for me, again, I have made millions short selling. I understand the short selling bug, but, right now it's kind of a virus because you just risk so much and you don't need to do that. You can take profits along the way on junk companies like FEMY. Thank God, at least I'm giving Ellis crap in the chat room and he's thinking about it and he's trying not to, but I'm like, I'm in his face all the time. I'll be in the face of anybody who shorts because I think it's such a poor risk reward strategy right now. It's not a question of if you blow up, but when. Whether it's your 2nd, 5th, 10th, 20th, 50th short, you're playing with fire. And stop losses don't protect you. Risk management doesn't protect you. If one of these squeezes goes bananas, you get crushed. And I just refuse to allow anyone to say that I didn't warn them because I've made hundreds of video lessons this year and in past years, but especially this year when the squeezes have gotten crazier, warning about this. And for those of us who are long, congrats. Try to ride these up, try to recognize the breakouts, try to deal with the choppiness. On FEMY, I'm just waiting. I've said it all day. I'm waiting for a panic. We just haven't gotten a panic yet. Maybe now, as I'm finishing this video lesson, it finally looks like the volume is fading and maybe this is the crack. The whole market is going red, by the way, too. We started off strong and we're finishing weak. Although I'm filming this midday, so anything could happen. But my focus is on FEMY, and I'm getting a ton of questions. What makes me think that there's going to be a panic? Because it's up on hot air. It's up on a short squeeze. whether the panic happens today, whether this is the beginning of a fade, which, I hope it doesn't, because afternoon fades are very gradual and it's tough for me to panic dip by, gradual price action. I prefer giant panics near the market open. Maybe it can catch, shorts off guard a little bit more, squeeze a bit more. Maybe, Monday is the panic day. It could even be Tuesday if you get more shorts. Like it's such an inexact science trying to guess how many shorts are involved. But, going back to when Ellis was shorting it at 120, and, I hate to pick on him, but I also love it too, and he deserves it too. He represents the short selling mentality, and he goes to these, short selling conferences, and they're all sponsored by these little brokers that have borrows. You have to understand, when I made millions shorting, it wasn't like as crazy as it is now with these crazy squeezes. We didn't have gigantic risks because there just weren't that many shorts and there weren't that many shares available. I have a whole music video called No Borrow, No Cry. I'm actually about to release the sequel to that 13 years later. Get excited for next week. But at the same time, because there's so many more shorts, it creates this kind of powder keg of upside potential. And I will be damned if anyone says I haven't talked about this and beaten the subject to death, because I have, and I'll continue to do it. I appreciate it, okay? Let me be very clear. Short selling is the riskiest strategy when trading these stocks. But because short sellers, most of them don't listen to me at all, and there's no hope for them, and they're just going to continue shorting no matter what I say, I can at least try to warn some of you and prevent you from playing with fire. Or, in this case, not even necessarily fire. It's like nuclear weapons, because you can just get annihilated. It's not just fire, okay? It's like radioactive fire. And then also, longs recognize that these short squeezes exist, recognize that they can go further than you think, and you got to just embrace it. Like, going back to this play on DMK, I mean, this was a stocks to trade breaking news play, but it was spiking so fast, and all the little shorties, oh, God bless their hearts, they were getting riled up, being like, this company doesn't deserve to go up this much. And I was buying it. It was already up. Like, this wasn't even a good trade on my part. Like, I was so late to this. And again, the shorts aren't wrong. DMK, I think, did crash. Yeah, crash 50%. So again, shorts, like, they're like, what are you talking about, Sykes? They all come crashing down. Yes, they do, but you don't know when. DMK came crashing down, but if you apply the same logic to shorting into any spike on DMK like FEMY, you're getting crushed, and it's not necessarily even over yet. NIR, again, really quick spike, really quick fade, but you can't apply that to plays like FEMY. And by the way, NIR, it was already up, it was squeezing patent news. I'm making 20%. When I make 20 or 30% on a trade in a few minutes, like, I'm going to take it. I don't care what it goes to. I'm buying it in the 30s. I'm selling it in the 40s. In just a few minutes, it goes to the freaking 60s, nearly 70. So I underestimated it, but then again, I locked it in. And some people are like waiting for the dip, and they're like, why aren't these plays, bouncing on the dip? Because they're not multi-day runners. They're breaking news runners, they're momentum runners, and then they're short squeezes. Like everything here from basically 45 up to 65, this is a short squeeze. I know it doesn't look like much on the chart, but you have to understand how many over-aggressive shorts are just shorting anything that's up. And again, they're not wrong the majority of the time. Look at BNOX. I missed this yesterday. Really pissed that I couldn't be there near the market open. Congrats to a lot of you. Big morning spike from the twos, actually the high ones to the sevens. Awesome job. This is undeserved. This whole, 4, 5, 6, 7. This is where the shorts are shorting it in the threes, saying this is ridiculous, it's going to come down. And sure enough, 2 days later, they're right. But to be right for like 50 cents or $1 a share and you risk losing $4 or $5 a share is just insane. And you don't know if it's going to stop at 7. It could have stopped at 8, 9, 10. So long story short, pun intended. Thank you, shorts. I'm grateful to you. We're all grateful for you. Keep being stubborn. Keep shorting. keep creating squeezes like OPGN. This probably didn't deserve to go up this high today. I was a little late. Probably should have bought that pre-market spike. Some of these plays are spiking the most pre-market, and I'm not great at that. You had to really get this thing here, but props to several of you who did. The good news is a lot of volatility, both ways. And if you're long, try to embrace the volatility, try to ride it, never believe it. Never, ever believe it, but try to ride it. And if you're short, again, thank you for your sacrifice. You're playing with nuclear fire. It's stupid beyond all common sense, but I'm not going to change you. So all I can say is thank you. Everyone, I'll see you in chat. Let's capitalize on play after play after play. We're in a hot market. Enjoy it.